Welcome to the Explainer. You know, when most people think about crypto, they think about buying low and selling high, right? Just trading. But what if I told you that's just scratching the surface? Today, we're going to dive into how you can turn your crypto into an actual source of passive income.
So let me ask you a question. Right now, is your crypto just sitting in a wallet? Just kind of waiting for something to happen? What if those coins could be out there working for you, around the clock, earning you money while you sleep?
Because the whole crypto world is really changing. It's not just about trading anymore. A lot of platforms are now built around this idea of earning. So in this explainer, we're going to break down some of the most popular ways you can put your crypto to work. And we'll look at how these things actually play out in the real world. We're going to explore 3 completely different paths to earning passive income. And each one has its own vibe, its own level of risk, and it's built for a different kind of person, from the super cautious beginner to the sharp strategic trader and even the social media gurus out there. Okay, let's start with method number 1, the most straightforward one of the bunch, simple savings. The easiest way to think about this is like a high-yield savings account at a bank, but, for crypto, and with some pretty major perks.
The main thing here is just how easy it is. With something called Flexible Earn, you're basically just parking your assets. The platform puts them to work, and you get a cut in the form of interest. And that word flexible is the absolute key. There are no lockup periods. Your funds are never stuck.
And honestly, look how simple this is. Step 1, deposit your crypto. Step 2, you just start earning interest, sometimes paid out every single hour. And step 3, you can pull your money out whenever you want. It's totally a set it and forget it kind of deal. And here's the number that really makes you pay attention, the potential return. We're talking about an APY, or annual percentage yield, that can go up to 10%. Now, just for a second, compare that to what your traditional bank is offering. It's a massive difference. So, who is this really for? Well, it's absolutely perfect for beginners who just want to dip their toes in the water, and it's a no-brainer for long-term holders, the people they call hodlers, who are just holding on to their crypto anyway. Might as well earn something on it, right? All right, let's level up. On to our second method, strategic bets. Now we're moving away from simple savings and into a model that requires you to have a little more skin in the game, a bit more of a strategy.
This slide really lays out the trade-off perfectly. With simple savings, you had low risk and a nice steady return. With this next method, you're taking on a calculated risk, but you're doing it for a shot at a much, much higher potential return.
So this product is usually called dual investment. And here's the gist of it. You are literally making a bet on where the price of something, like Bitcoin, is going to be on a certain date in the future. You pick a target price, you pick a date, and you lock your funds in. This timeline makes it super clear. First, you lock in your asset. Then you set your prediction. For example, you might bet that Bitcoin will be above $75,000 in 30 days. And then on that final settlement date, you find out if you were right and you collect your earnings. And this quote right here is the magic of the product. Your yield, that high APY, is guaranteed, it's fixed. It doesn't matter if the price moons, skyrockets, or if it dumps, as in totally plummets. You earn that yield. The only thing that changes is which currency you get paid back in, and that depends on your bet. So yeah, this one is definitely for a more active investor. If you're someone who's already watching the markets and you have an opinion on where things are headed, this lets you put your money where your mouth is. It's for people who are okay with a bit of risk to chase some seriously high yields. Okay, our third and final method is a totally different beast. We're throwing the first 2 out the window. This isn't about investing your own money at all. This is about leveraging the power of your network. We're talking about earning through community building. And just look at this. This slide shows you the kind of potential we're talking about. These are real earnings that didn't come from an investment, but from bringing new people to a platform. The upside here can be pretty staggering. So how does it work? Well, it's a classic affiliate program. You get a special referral link, you share it, and whenever someone signs up and trades, you earn a piece of the trading fees they generate. The really cool part is that this often lasts for the entire lifetime of that account, so it can become a true passive income stream. And this is where your jaw might drop a little. It's all about scalability. The source material we looked at showed that with just 20 active traders you referred, you could be making around $370 a month. Not bad. But if you can grow that network to 200 traders, that number could jump to over $9,000 a month. It's all a numbers game. So who is this for? It's pretty obvious, right? This is for the people who already have an audience. The content creators, the YouTubers, the community managers, anyone with a network. In this case, your network is the asset.
All right, we have covered a lot of ground here. 3 very different ways you can earn with your crypto. So let's do a quick recap so you can see which of these paths, if any, make sense for you.
This table lays it all out pretty clearly. You've got simple savings, low risk, great for beginners. You've got strategic bets, higher risk, higher reward, built for active traders. And then you have network earnings, low financial risk, all based on effort, and perfect for creators and influencers. 3 paths, 3 different kinds of people.
And that kind of leaves us with one big final question to chew on. As these kinds of earning tools get better and easier to use, are we heading towards a future where the main way people engage with crypto isn't just about trading, but about actually earning from being a part of this new digital economy? Something to think about. That's all for this explainer.